Hi everyone, it's Mike Kramer of Mock Capital. Today is Tuesday, June 25th, and it is around 6 o'clock New York time. So it's not going to be a very busy end of the week here in the U.S. The big things coming up will be the third revision of the GDP for the first quarter. It's not really expected to change very much. People are going to be paying very close attention to the initial jobless claim data on Thursday morning, just because we have been seeing these numbers creeping a little bit higher the last couple of weeks. So we're looking for 235,000 this week. And then, of course, the big number will come on Friday morning at 8:30 with personal income expected to rise 0.4% versus 0.3. Personal spending expected to rise 0.3 versus 0.2. PCE, basically analysts have done a really good job at estimating these numbers. They just go through the CPI, PPI, and import-export price data, and they're basically been pretty good at getting these numbers the last couple of times around. So it looks like the PCE, we're expecting a flat month, basically in line with the CPI report, down from 0.3%. Year over year, we're looking for 2.6, down from 2.7. Core, we're looking for 0.2, down from 0.1. And year over year, we're looking for 2.7 versus last month's 2.8. Again, these are for May. And then, of course, the following week in the U.S., we're going to start getting all that ISM surveys and JOLTS data, which we'll go through next week as well. It will also be a holiday-shortened trading week in the U.S. with the 4th of July holiday. Today, I thought we would start with commodities just because of what we're seeing. We have seen oil prices move higher. They had broken out late last week. And you can see that the last time since we spoke, they've moved up a little bit further, right here to around 82 or so. That's been an area of resistance. And at least for now, that this has been an area where we've stopped. You can see momentum has certainly turned more bullish, but we again need to really see a little bit more confirmation here, and are going to need to see oil really get above this area right in here at 82 and 81 to 82. Which really could open the door to something much further, perhaps 85 and perhaps all the way back up to this 87 area. But again, right now we've been struggling the last 3 days, I call it around 81. And so that sort of, that would at least make us have to consider the downside risk. I mean, clearly if we were to break support at 80.40, that certainly sets up an opportunity probably to revisit this region in here around 77 or so. So this 80 area, I would say, is really of big importance for oil prices at this point in time. When we look at copper, we're going to go over to copper just because we were talking about that last week. We were really holding very nicely above 40.40, but that broke actually today. And now we're watching to see if copper is going to make another move down, which could potentially lead it to around 421 or so, which was an area of support back in here. You can see momentum has really shifted lower in copper, and we can also see that we're really, again, we're really not quite in an oversold condition yet. We're still trading above the lower bound of the Bollinger Band, and the RSI is only still in the upper 30s. So it's certainly possible that we could continue to see copper move back down towards this 421 area. Clearly, a break back above this 445 region could certainly open a doorway to test the 20-day moving average somewhere around 453. Again, the reason why we're starting with copper is basically because we know that it's had a really good correlation and relationship with the FTSE 100. And basically, the way it's been working is that where the prices of copper go, the FTSE tends to follow. And with the move down in copper prices today, one might expect that the FTSE may continue lower and head towards this trend line, perhaps around 8,100 or so. Clearly, if we were to break 8,100, it starts opening doors to much lower levels, perhaps 7,900 or so. Clearly, there is, again, bearish momentum in the FTSE 100 as well. So we're not really at a point where we could say we're oversold at all. In fact, we're more closer to the overbought, at least on a moderately overbought condition up here at the upper Bollinger Band. So at this point, as long as copper continues to head lower, then we have to have a bias that's lower in the FTSE. When we look at the DAX, The DAX has been weaker. It's been unable to really get above this 20-day moving average the last couple of weeks. When we take a closer look at the DAX, what you'll notice is that there was an uptrend in it earlier today, and now we're trading below this level. And so if indeed the DAX has broken and started another leg down, we could be looking at a potential move down in the DAX somewhere to around this region in here at 17,800 or so. If this was an actual bear flag, let's call it, and we were to measure this out, it could actually suggest there's even further to fall from here, which would take us down somewhere to perhaps 17,600 or so. At this point, at least, there does appear to be a technical setup in the DAX, which looks and favors more downside at this point in time. So we need to consider that the FTSE and the DAX still look fairly weak. And at this point, we do have some indications that would suggest we could see some further downside. You can see that there's also some important levels of support in this region right here around 17,700, which is just really above where this projection would be if this is indeed a bear flag that has formed. Dow was weaker today. It was weaker by 75 basis points. Last week, we actually were talking about the potential for the Dow to either move higher or lower based off of whether it could get through this level of resistance. And at least for now, it has, and it's actually served as support today. So this level, again, is of importance at around 38,950, because clearly if we break through that, we're talking about revisiting this low here at around 38,300. Likewise, if we can somehow take out this high at 39,584, it would open the pathway to retesting the highs. Right now, though, we have the potential type of setup, which looks like a double top. Again, but you're not going to get confirmation on what this is until we actually break some support around 37,700, and right now we just don't have that. So right now we're still in a phase where we're trying to basically figure out which way the trend wants to shift, because there had been an uptrend in the Dow for some time, but really at this point we're more in a sideways consolidation pattern, and really what looks almost like a symmetrical triangle that's forming. It could even, if you start drawing out a similar sort of triangle pattern from this side, you can see what looks almost like two symmetrical triangles potentially forming some sort of diamond. Diamonds can either be bullish patterns or they can be bearish patterns. It really will depend entirely upon which way it ends up breaking. At least at this point, when we look in the NASDAQ, number one, we can see that we've broken this short-term uptrend that was present and that formed off of the May 24th lows. This is couldn't be important, and could be telling us that a change in trend has developed, at least over the very short term. We can also see that we came down to what looks like a support region around 19,460, and so far that's bounced. Right now it looks like until we really get some clarity whether or not the NASDAQ's going to be able to get back up to and break resistance at 19,960, we're watching this support region here at 19,465, because that could really open a doorway to potentially filling this gap, and potentially coming down and filling this gap all the way down at 18,600. So this is a pretty important level in this here, right here, where we are presently, right between 19,465 and 19,700, because if we can gap higher to start on Wednesday morning, that probably opens the door to testing these highs. If for some reason this continues to act as resistance, I would be looking for a break of support at 19,470. When we look over at the S&P 500, that's also been at least consolidating the last couple of days, really not giving us a good sense of direction at this point. We do have a little bit of a downtrend that's forming, and we've also seen a little bit of a sideways consolidation. So at this point, we have what looks like a potential symmetrical triangle pattern that's formed. So we're going to want to watch to see how this breaks. Again, it's really not all that different than what we're seeing in the NASDAQ, because again, here's your support level right here at 15,000. Here's your support level of 5,450, and we have this mild level of resistance at around 54.85. So again, at this point, you break the downtrend, you break the triangle, you break above 5,485, you're going to be on new all-time highs. If this 54.85 region continues to serve as a support as it has basically since the middle of last week, then that's going to tell us that we need to be very mindful of 54,446, because that really opens the door to a filling of the gap down here at 53.75 or so, at least over the very near term. When we swing over to some currencies to wrap this up, when we look at the euro, we've been watching this one now for some time try to battle this area around 109 and around 107. We basically can't get through 109. We basically can't get through 107. So we just continue to essentially trade overall in a sideways manner. But again, what we're sort of looking at here is still a continued loss of momentum. We've clearly broken a bunch of major uptrends. We really haven't tested the downtrend now in some time. And this would suggest to me that the downward trend in the euro still is not over. In fact, we've continued to make really lower highs. And although we haven't made a lower low yet, that still seems like the obvious direction to me. And so I would continue to think that we're likely to see the euro heading back to this 105 to 106 area over the near term. When we look at the pound again backed off this 128 region, and now we're in a trend lower. We did test 126, so we're going to wait to see if we can clear that and then head down towards this 125 area, which would make sense because it would complete this sort of sharp rise, which can act as a gap from time to time. They do have similar mechanics when you get these very rapid rises. It's not unusual to see these get retraced all the way to the origin. When we look at the yen is briefly, the yen is just flirting with the 160 area. The last time we saw the yen get up there, the government in Japan intervened, and that sent the yen sharply lower. So you can see they're very, very careful right now trading this 160 region. At this point, again, I still tend to think that the direction in the yen is going to be higher, with the potential to maybe get back to this level that dates back here in, call it December of 1986, around 164. And so that's basically all I have for you today. I hope this helps, and we'll see you next week. Bye.